Good afternoon. I'm Christina Bui, Chief Revenue Officer at Kranz, and welcome to our Executive Roundtable Venture Capital Series. And today we're going to discuss navigating venture capital's fast-changing geographical landscape. And without further ado, I would like to introduce you to Tom Muscarella, CFO and our Venture Funds Practice Leader. Tom will be leading our discussion today. Tom?
Hello, everyone. Thank you for joining and welcome. As Christina said, I'm the consulting CFO and the practice leader of our fund administration group. At Kranz, we provide full service fund administration to venture capital funds, as well as the related GP and management company entities. And we've earned a very strong reputation for helping emerging managers and debut funds to navigate through the startup process. Additionally, Kranz has been the go-to financial solutions and outsourced accounting firm supporting startups for over 25 years. Over the last few years, we've supported over 1,000 satisfied startups from seed through exit, as well as meeting the needs of their VC and PE investors. Whether you're focused on operational accounting, strategic finance, fundraising, M&A, or audit, we know how to turn your entrepreneurial innovation into superior valuations. We've put together a group of expert panelists for today's webinar that will provide interesting and diverse views on the subject of the changing geographical landscape of venture capital. They are Bill Baumel from the Ohio Innovation Fund, a venture capital firm based in Columbus, Ohio. Grady Buchanan of NVNG Investment Advisors, a fund-to-funds platform that's based in Madison, Wisconsin. Milton Vescovaci of Gunster, a law firm based in Miami that handles fund formation for private equity firms and family offices, as well as financings for both companies and investors. And Chris Valdi of CBRE, a global commercial real estate firm that has its finger on the pulse of who's moving and where they're going. But let's begin with a polling question to get a better sense of who our audience is. Which of the following represents why you've attended today's webinar? I am with a startup organization, possibly in need of funding. I am gathering information to learn about other geographical investment opportunities. I want to connect with the investment community in these markets, or just personal interest. I'll give you a couple of moments to make your choice, and then we'll see the results. Auckland, do you think we have enough time? All right, let's see here. Which of the following represents? So I am with a startup company, 25%. I'm gathering information, 8%. And I want to connect with investment opportunities, 25%. Well, it's pretty evenly divided. There's a quarter each of two of those categories, and almost half of the people are here for personal interest. Thank you for that. Okay, so let me move on. About a year ago, the New York Times published an article that was titled "Seeking New Businesses and Better Lives, Investors on the Coast Move Inland." A wave of venture capitalists is heading to quieter, less expensive locales where they are helping to fund startups. That article contained this quote: "A growing wave of VC professionals is leaving the congested, costly coasts for quieter, less expensive locales where they're helping to fund startups. No longer do ambitious young entrepreneurs have to relocate to California, New York, or Boston to build a business. Startup ecosystems are coalescing across the United States and have sparked a surge in small business with many national or even global ambitions." CBRE has provided us with some data to support these claims. This first slide shows that in 2019, California and Massachusetts had 38% of fund formations. Take a look and see where the rest were. The next slide, it shows that in 2019, California and Massachusetts had only 38% of new fund formations. but the slide shows that by 2020, those states had just 26% of new fund formations, with California being the big loser and Florida and Texas the big winners. As you can see, there were funds formed throughout the mountain states and the Rust Belt as well. Chris, do you have anything to add to that before I move on?
No, I would just say quick kind of, this matches a lot what we've seen kind of a macro trend around geographical diversification of talent too. So it was interesting just to see how the VC creation kind of paralleled that as well.
All right, so let's begin and get the perspectives of our panelists. I'll start with Bill. Bill, you've been investing you spent over 20 years investing in Silicon Valley before returning to your home state of Ohio to start the Ohio Innovation Fund. Can you tell our audience your story, how you decided to make that move and why?
Yeah, so I actually grew up in Ohio, went to school at Ohio State in Michigan, but then out of necessity, because interested in startups and innovation and growth and what's next and creating new industries, went out to California for about 20 years. Took a number of companies public, 5 companies public, sold 10 companies to the Oracles and SAPs and Medtronics and Strikers and such. Wasn't really thinking much about Ohio, kind of came back to visit family over the summer and such. But over the last 10 years, started seeing some innovation happen. And then about 5 years ago, really, we're starting to see companies similar in potential in areas in intellectual property, as to what we're seeing out in California, or is what I was seeing out in California. And so, made the move back about 5 years ago to form the Ohio Innovation Fund, and have been pleasantly surprised with the results so far. We have about 20 companies currently. We just had our 3rd exit with Sterling Ultra Cold merging with BioLife Solutions. The exit potential here, is the exit potential for $1 billion plus. That's not every day, but probably about 10-20% of the portfolio. But there's a lot of exit potential in the hundreds of millions. I think the initial deal value on Sterling was about $300 million. But one of the big differences was that we led a monster venture round in Sterling of about $6 or $7 million. And that's all the company took, under $10 million to grow to a, call it a close to $50 to $75 million revenue company that, led the cold chain for the distribution of COVID vaccine, and right now is working in the cell and gene therapy area as well. So there's a lot of very passionate entrepreneurs. They're working very capital efficiently. And the venture market here, as we'll probably get into later, is a little bit different. There are opportunities across the board. You can't really specialize because there's not 50 super cybersecurity or data science companies here, but there's a handful of great cybersecurity companies, data science companies, cell and gene therapy, biopharma, med device, SaaS, and what have you. And so we're investing across those. And so far, the results have been pretty promising. But in addition to capital, one of the biggest learnings I've had in an emerging market is the need to be there or have a partner there. Because unlike Silicon Valley or Boston, where a lot of repeat entrepreneurs or people that know people or kind of just understand startups through osmosis, being in those environments, it's newer here. So there's a lot of hands-on working with the CEOs and building the teams, working on the product roadmap, forming partnerships, fundraising, marketing strategy, sales strategy, recruiting, all those sorts of things. But a lot of great opportunity. We're a few $100 million deals, all of a sudden, 10, 15x, 20x, and half or more than the fund because of the capital efficiency and valuations.
Yeah, very nice. Thank you for that. Grady, turning to you, NVNG was started in Wisconsin. What is your strategy, and what can you tell us about how you decided to open a fund of funds there, and how being based in Wisconsin affects your business?
Yeah, sure. So our background, my partner and I were ex-institutional investors attached to one of the endowment funds at the University of Wisconsin-Madison, actually within their tech transfer office. So a lot of experience trying to connect venture capital to what was on campus and some new ideas, new startup companies that would come out through research, things like that. And what we ended up spinning out, we had an affinity toward the venture capital portfolio. we spun out to create very similar models that Bill would know well. In Ohio, Centrifuge has one, Renaissance Venture Capitals over in Michigan, to raise from in-state corporations and larger institutional investors, and then of course family offices and investors in the space, to go out and attract venture capital firms to our state. And so what we've done a decent job at is exposing what we have, but we haven't received a lot of the investment dollars. And so a lot of the education within our ecosystem needs to be heightened. The access for venture capital certainly needs to be heightened as well. And a fund of funds, so our strategy again is to invest in funds located in Wisconsin if there are that hit our marks, but really focused on returns and focused on the funds that can speak the Midwest industry language, which luckily is Bill in Ohio too. We have the same type of industries here. We have a countless amount of industries, obviously more hard tech focused. So for us, it's can we get those funds that are early stage here located in the Midwest with ties to the Series A, B folks that are on the coast that want to look here. And our pipeline has about 500 funds in it that have expressed interest in investing not only in Wisconsin, but the broader Midwest market for a multitude of reasons. But our fund itself will hold about 15 to 20 venture funds, really trying to connect them with in-state corporations and what's here on the ground in Wisconsin.
So is part of your due diligence then to try and find funds that already invest in Wisconsin or are willing to invest in Wisconsin?
Yes, for the most part. So we do have an emerging manager bucket. I think that that's important, and we can talk about that as well. But for funds that haven't, because not a lot of funds have made a lot of investments here in the state of Wisconsin. We have a few that are looking at what we're doing. You get to the later rounds, certainly in the digital healthcare space, we have some funds here that have made investments, but we don't have, boots on the ground from some of these prolific funds that we all know and have heard about, but they've made investments in Minneapolis or Chicago. And so they're certainly here in the Midwest, but maybe they haven't done a deal in Wisconsin. They're still in our pipeline, obviously. It's not like I guess the easiest way, Tom, is if they're not flying over Wisconsin, they would hit our marks. Obviously, they run through extensive diligence and how they fit within the portfolio, but it is those that are willing to look here and speak with the corporations and understand what innovation here looks like and how to shape it.
Mm-hmm. Very good. I'm going to turn to Milton now. Milton, Miami is definitely a hotspot for investing in startup companies. Tell us what you're seeing in Florida.
So Florida is actually quite different depending on what region you're located. I'm in Miami. So in Miami, we see a lot of healthcare and a lot of tech-driven software development companies. Companies have come to Florida from places like Latin America to establish themselves here, realizing that access to capital is better if they're here locally. We also see some of the exodus from places like New York and Chicago and places like Silicon Valley and LA and so forth coming here as of recent. But honestly, that trend is not new. May have been accentuated by the phenomena and this whole issue with COVID, but I've been here for 20 years and we've seen, folks coming from all those markets and abroad for that entire period. Big bulge, PE bracket, firms, big banks, have been coming down here for years. Miami tends to be a big private wealth location, lots of family offices and lots of angels. It is kind of fragmented though. And I would say that's true about the entire state. So, you'll find places like the, central part of the state to be focusing on a lot of aerospace and, defense type technology development. In places like Tampa, there's more medical tech and healthcare IT. And so while we're all in the same state, we're dealing with different opportunities. And that's true with the venture funds. The venture funds traditionally in Florida have been focused on real estate, and they're still primarily on real estate opportunities. We're seeing a lot of like property tech investments and ingenuity coming out of Florida. But the aviation space has always been very sophisticated here, and more so since the advent of the Space Force and all the launching of rockets and the development of technology for rocket launches and for satellite. That's all being done in the Space Coast region. And as you go up north to Jacksonville and the Tallahassee area, you see a lot of interesting development of technology. They're mainly financial services oriented. And as you may know, we have the Magnet Lab, which is one of the largest magnet, basically facilities in the world. And a lot of technology that utilizes magnets, including the levitated railroads, and the high-speed trains, are developed out of that facility. So it's very dynamic and it's very different depending on where you are.
Very good. And you and your firm do both fund formation for family offices and VC firms and whatnot, as well as transactional work and other work reviewing deal documents on both sides of the deals, right?
We have clients that we represent the company and we help them from the very beginning. Our firm is very involved with the incubators, both the private and the institutional ones that are at the universities. We're also involved in the accelerators in town, and we make introductions and we help develop these companies. A lot of our pro bono work goes into that, and then once the companies become more sizable and are able to access capital, then we obviously help them with the connections that we have with the venture funds and the later stage funds that we represent.
And I know you've been in Florida for a long time, and you say that this activity isn't really new, but would you agree that there's at least an uptick? I mean, does it seem like there's more activity on all sides?
Absolutely. Florida it's interesting because about 10 years ago, we weren't seeing a lot of venture funds and private equity funds within the state. There was always an ecosystem, but the companies felt that once they got to the Series B round, they had to go outside New York, Boston, Silicon Valley to raise that capital. I'm seeing more of that, capital need being satisfied by local firms now, some of which are actually parties that are coming from outside the state. And a lot of that you've heard as of recent because we've had very supportive governors, very supportive mayors. The mayor of Miami has become a phenomenon. Mayor Francis Suarez, he's all over the internet, and he's physically visiting a lot of states. I think he was with Elon Musk over in California, looking at their facility. They're talking about maybe doing some work down here in Florida. So he's very much a proponent of the business community and the startup community, and he's attracting companies here. We've got all kinds of incentives in place to help these companies, and the ecosystem is very well developed and getting better with the entree of new folks, more sophisticated investors.
Okay, thank you. Chris, moving on to you. CBRE supports the startup community a little bit more than the VC firms themselves. Tell us what you're seeing as far as people moving around and migration, whether it's the talent or the startup companies themselves. What do you see?
Sure. And so our group, is a little unique. I mean, so we're a consulting firm within a large real estate company that our tagline is sort of, we solve for the place before space. So we're coming in with a lot of portfolio companies, that are part of VC and PE funds to help them solve for talent access. Where can they go outside of some of the biggest markets to access the high quality, hopefully lower cost talent? So, obviously, I think this was a trend that really predated COVID, but was accelerated by the pandemic for the geographical diversification. So we're looking at, a lot of markets across the US, many of them we've actually already mentioned on this call. So in Ohio, Milwaukee, and Madison, in Florida, it's these markets where we can find a favorable balance of supply and demand of talent. So for instance, a market, not to pick on it, but a market like Austin, Texas, which we've seen a lot of coverage about, tons of in-migration. That's certainly a positive thing. And it's a market with lots of high quality talent. There's also a lot of companies chasing that talent.
Mm-hmm.
So you're running into some of the same issues that you might see in the bigger markets like Silicon Valley or Boston or New York. So what we're doing is kind of going out there and figuring out for our clients, where can they fit in as an employer of choice? So places that are seeing in migration, but also might have also good generation of new talent from universities, and kind of a level playing field. The biggest players in tech, if we're talking about tech companies, might not be in that market, but you might have a really solid startup ecosystem, and you might have other big employers in other verticals who are hiring similar talent profiles. So you can kind of jump into that market and really be a draw for the top quality talent. So, we are tracking really closely these migration trends. We're looking at it by skill set, by years of experience, and we're seeing some interesting trends there. So, like the Florida markets, for instance, are doing really well on attracting kind of a broad range of talent, whether it's junior, mid-level, or senior talent. There's some markets like, Charlotte, North Carolina, that's doing very well at attracting more senior talent, maybe a little less at the youngest folks. And there's some other markets on the other side of the spectrum that are doing very, very well attracting the youngest talent. Kansas City is one, and that's a market we're actually quite bullish on too. So we're definitely keeping tabs on the migration, but it's sort of one piece of the puzzle that fits into how we solve for, where can clients go in and attract and retain top quality talent.
Are you tracking any of the motivations or the reasons why people are moving? Is it, they're leaving California because taxes are too high, or because they want to go to Florida for warmer weather and more sunshine, or why are people migrating?
Yeah, and I think of it, I'll answer that in two ways, because there's sort of why are the people migrating and why are the companies migrating too. And I think the people migrating, again, once we split that into sort of where you are in your professional, your tenure, where you are in your career, I think it's the mid to higher level folks, and let's even call that 10 years plus, where we see motivations that are more around, where can we go to afford more house for our money? We might be, starting or growing families, more motivated by taxes, housing costs, things like that. So I mentioned like Charlotte, North Carolina is a big feeder market for a lot of those people, especially coming from New York and Boston and Chicago. Interestingly, what we're seeing on that lower end of the spectrum, for the junior talent, like the Bay, this isn't, really covered, but our data shows that the Bay Area is actually one of those markets that's still attracting the youngest talent. It doesn't do very well for senior talent. So I think some of those motivations, around young people maybe haven't changed that much. They want to be in the mix where they feel they have, that network effect. They maybe have more career opportunities early on. So we're still seeing some of that. And then on the company side, I think a lot of the motivations we've seen and heard a lot of companies, that have made big announcements of, maybe leaving headquarters from the Bay Area. And I say headquarters purposefully because I think, a lot of that is driven by taxes, obviously. But most of those companies, at least on the tech side, that have left the bigger markets are keeping a majority, if not all of their workforce in, Silicon Valley or in New York. And it's more about, we'll put the C-suite, and for tax purposes, we'll put our headquarters in a lower cost, less regulatory environment. And we might put a larger portion of our future headcount growth into that new market, but it's really more of a both and instead of an either or. So it's not people are, picking up in all of their headcount and all of their operations from some of these markets. It's let's establish a new location and really focus growth in these new places.
Got it. Thank you. I found it a little interesting that of the panelists we have here, all three are centered in areas where there are strong universities. And so, Bill, especially with your fund being kind of tied in with the universities, maybe you could be the first to answer this question, but how important is it when trying to start a new ecosystem outside of the more common areas that it be near universities and other centers of excellence?
Yeah, for us, it's been very helpful from a couple of perspectives. First has been from a deal flow perspective. You take, for example, Nationwide Children's Hospital that has a number of joint appointments typically with Ohio State. We've invested in a number of cell and gene therapy and biopharma companies recently that have spun out of there that are, and even one was acquired about a year ago for a few $100 million. So there's a lot of activity going on there. One of our companies utilizes some technology at Cincinnati Children's. We have one cybersecurity and one med tech spin out of Ohio State. And obviously the training of the workforce is important. So both from a deal flow perspective, but then also kind of a well-trained, educated workforce is very helpful. Yes. Another thing we found is that the generation in college or recently graduated from college, in this area, and particularly Ohio, but I think in emerging areas, they, typically when I went to Ohio State or Michigan, a lot of people went to General Motors or Procter and Gamble or what have you. And there are some great opportunities around it and nationwide and in different places like that, and Procter and Gamble and such. But as far as what entrepreneurship is, in terms of working on the future, working on things that are innovative, changing the world, working in more of a flat type structure, working cross-functionally, understanding the impact you have throughout the organization, like I said, working collaboratively. We find that really the students and regional alumni almost gravitate towards what we're doing. So one of the things that we do have is a student experience program, where right now we have 7 interns, in our 5 to 7 interns a year. They come from Ohio State, locally, Ohio State, Ohio University, Kent State, Kenyon University, Case, Miami University, and such here in Ohio. And then we do some boot camp, and that's usually about 10 weeks. We have about some boot camps as well for a week where, about 12 to 15, either undergraduate or graduate students go through a week of diligence on some live companies here from our CEOs, and then some shadow days for freshmen, sophomore to understand it. But also our portfolio companies are really utilizing the students as well. We have about 50 to 70 interns each year. There's a number of innovative programs, like Ohio State has this honors business and IBE, which is integrated business engineering, which honors engineering that are in business, or honors business that also are in engineering. Really very great product people we place in our companies because they understand both the market side and the technology side. So it's been very helpful having that base here for our companies, both, like I said, from a deal flow perspective, but also, a lot from a workforce perspective, and that's been very helpful in staffing our companies and growing our companies. So it's been, it's been very, very important for us.
Yeah, very good. How about you, Grady? Anything to add to that from your point of view of being in Madison?
Not too much to add. I mean, just like Bill said, I mean, in Wisconsin, the University of Wisconsin system has, just like every other Big Ten school, they have a tremendous amount of research funding. A lot of grants come here. The tech transfer office is obviously very large. And so trying to spin out what was on campus and format them in ways that are investable, right? I mean, we would have, Flagship was a good example. They were in the portfolio. They would come, and they were Flagship venture capital group responsible for Moderna, right? That everybody knows now. But they wanted to look at Midwest companies and wanted to get in early, and they could help create things. We don't just do medical device and biotech on campus either. And so the exposure that we have needs to be increased, which was, always kind of an issue, but we're graduating to that scale. I mean, right, though, our goal with our universities is to help to connect the technology to, again, for our strategy, to this traditional, or I should say once traditional industry. So you think about like where the hard tech innovation is actually going to come from. It should probably come from those that really built up the industrial revolution of the past, right? Which are the big companies here in the Midwest. And so getting these corporations involved with the universities and attaching them in ways where, because Bill's exactly right. I graduated with folks not that long ago, but Johnsonville, or are we going to go make sausages? But at some level, Johnsonville also has this massive innovation arm. They also invest in venture capital funds. They do a lot of direct investments. But how do you know that at the university if they're not super involved? And I'm not saying they are or aren't, but our goal with our fund is to try to connect not only the venture capital funds, but also the industries that are here to the universities. And hopefully we produce more deal flow, and we have venture funds spin out companies, maybe keep them in Wisconsin, maybe move them, but that are focused on building the Midwest here. And that's what a lot of these schools, certainly in our state, have a lot of research dollars going toward. So very bullish, obviously, which is why we're here. But yeah, UW-Madison's been doing this for a long time.
Good, thank you. And Milton, I know from chatting with you earlier that you had some very interesting perspectives on how the environment in Florida has changed with students that used to graduate from Florida universities and leave. And I don't want to take your words. Why don't you?
Yeah. So I wanted to add to a comment that Chris made earlier about the reasons why some of these companies were coming. And I think it's one, the talent pool is staying in Florida. And as a result of COVID, and for several companies, the reason may be different. Maybe, setting up a second facility, which is, like a beachhead. One that comes to mind is Blackstone is opening a second office here that'll be substantially staffed by, I think, a lot of folks from New York. Starwood opened up its second headquarters here. So companies like that, SoftBank has its fund here and has been making a lot of investments locally and over in Latin America as well from Miami. And so the reason why these companies are coming, maybe tax driven, maybe, the hassle of working in a lockdown state where Florida hadn't been, locked down for the last 6 months. It may be, pro-business climate, which, Florida's definitely been known to be one of those. But the reason also has been, and this is kind of different, I think, over the last 5 years, that the talent pool, which comes out of the top 12 universities here, they typically left. They went to New York, Chicago, places like that to really get the training, and then oftentimes they would return. A lot of those folks are not leaving because the Blackstones are here, and the Goldmans are here, the Starwoods are here, the SoftBanks are here, and then some. The list is long. They realize they don't have to go to New York to get that training. They can get it here, and what's interesting about Miami is the 6 degrees of separation is 100% true. Everyone knows each other here. And if you grew up here and you end up doing business here, you're going to end up working with your friends from high school or college. And what a great environment to actually do business, where you know each other, the folks that you trust. And so even though we get a lot of folks that are sort of transient, the business climate here tends to be very well known. Okay.
Well, I don't think any webinar of this sort is complete without touching a little bit on COVID. I know my own daughter was living in San Francisco, but working remotely. And since she was working in her apartment, she figured I might as well do something different and move to San Diego for a few months and just continued to work out of San Diego. Now that was temporary. I know some people are moving permanently because they have the opportunity to work remotely. Chris, what do you think about that? Are these changes that were maybe initiated due to COVID going to be permanent, or do you think once we're totally 100% out of the pandemic, things will return back to normal geographically?
Yeah, and I think one of my kind of personal opinions, backed up a little bit by the data too, is that some of the bigger gateway markets that saw the bigger spikes in outmigration, like a Bay Area, like in New York, those places also tend to have the biggest population of sort of the younger, single, higher income, people and talent. And so those are the people that are also the most likely, the less tied to place necessarily and the most likely to move. So, I'm in San Francisco, so I've seen that just within my own friend group. There's tons of people that have gone and tried out multiple different places. And I think, that shows up in the data, but we're also kind of waiting to see now what happens with return to work. A lot of the big tech companies here are finally coming out yesterday with their policy. Some of the others have come out earlier. And a lot of them are actually doing this hybrid model of, you're going to be either sort of required or at least have the option to be in the office a few days a week. And so with that, and, a lot of the smaller startups are kind of following the lead here of the bigger players. They've been kind of waiting for those announcements to be made. So I'm kind of wondering and have a hunch that a lot of those people, not all, a lot of them might be coming back because there's going to be this issue of, even if you have the option to work 100% remotely, but other people on your team or in your company are in the office, are we going to be able to have that equality of opportunity, or is there going to be, are you going to be sacrificing anything by being a remote employee? So, I think we will see a swing back. But at the same time, I think a lot of this migration, especially for the more mid to senior level talent, is probably real and more permanent. So long story short, I think yet to be determined. But I think we're going to really start seeing that in the data over the next couple of months now that we have more firm policies from the companies.
Anybody else have thoughts about that? It's pretty complete.
Yeah, I think Miami is going to end up being hybrid for a little while. I think September is when the folks expect the great majority of the folks to return back to the office. And we're hoping that we'll have mostly everyone back by the end of the year. But there will be options provided, at least from the employers here in this market, to allow folks to work permanently from home if they choose to.
Mm-hmm. Something I've always thought about as far as the VC ecosystem kind of being centered in a couple of places, the majors, the Boston, New York, Silicon Valley area, and then a few others that are in the next tier, is that there is a very strong infrastructure. And by that, I mean, not aside from the talent pool, you have the attorneys that do the fund formation, you have the accountants, you have the fund administrators, you have all that support. How do you guys feel about that? Bill, I'll start with you. You made a move. Was that a concern at all to you that, do we have this infrastructure to support my firm?
Yeah, that was definitely something to think about. Obviously, the most important is the deal flow and quality of deals and everything else. So we do use some local accounting, legal, and other type services, but kind of tying back in the last thing on COVID, maybe early on people would ask about that, but in this environment they really don't ask about kind of where physically are they next door to you or what have you. So we tend to use it's worked seamlessly, whether it be say a Kranz with a CFO work, whether it be a Wilson or Cooley or whoever on IP, particularly the IP side, because that is a newer area for our region. On some of the corporate deal side, we kind of use a mixture just depending on where we're at and what type of transaction it is. So that was a concern, but we found working with those kind of has been just fine and worked really seamlessly and well for us. So we can kind of we kind of are focused here on the deals and working with the entrepreneurs and the service providers that we utilize in Silicon Valley and elsewhere, really help. And then also, I mean, one of the things that beyond that is that there's also a transfer of knowledge too, because when our entrepreneurs work with a firm, whether on the CFO side like a Kranz or whether on the legal side with different legal firms in the Valley and elsewhere, they start to understand how things operate and all that. So that's also been very helpful as well. So it's been very collaborative and helpful in that regard. It hasn't really, it's gone off very well.
I guess pre-COVID, as long as you could deal with the time differences, it was not a problem. Post-COVID, even that concern seems quaint.
Yep.
Nobody seems to care where anybody is anymore.
Yeah.
How about you, Grady? Was that any consideration whatsoever for you guys, or not at all?
It certainly didn't help when it came to fundraising. I can say that. But I will say that COVID made it, just like these guys have said, very accessible for talent to want to work anywhere. I mean, at the end of the day, we're doing desktop diligence. We're battling against time zones at this point. It's not that complicated, and it's not that unlikely to want to see an Atlanta C-suite executive want to work for a Milwaukee startup, just because there's autonomy there. There's a schedule flexibility. It's 1 hour difference. But I do think that more and more of this talent will start to look at, and I think Bill's entirely right, you got to look at the deal flow and where it is, but venture capital has a tremendous opportunity right now to go into smaller cities and really build from there. And I think that's where COVID has kind of proliferated this. And so the Bay Area, Boston, New York, these are certainly going to be anchors for startups and what they do, but there is an opportunity to invest in industry that now are kind of rapidly changing. And we, being in the Midwest, we've seen it, and it's happening because you have smart manufacturing, you have IoT, you have robotics and medical devices and things that we are good at. But this hard tech innovation, or whatever we want to call it, is very much around, okay, where's that talent that's going to build these things? People in California know semiconductors really well. They can build tech, but can they pour it over into the Midwest? And then Boston, New York are unique in their own rights, but they have a lot of talent. And to work in the Midwest, we're right in the middle, which is kind of fortunate when it comes to time zones. But I go back to kind of what Chris was talking about on the talent side too. We've seen this wave and this fallout of urban concentration, right? And Milwaukee's now a destination, Madison's a destination, Sheboygan, which is an hour north of Milwaukee that nobody knows about, is kind of a destination because Kohler's there and a bunch of other things. So trying to get the Midwest on the map in the eyes of entrepreneurs who are on the coast could be difficult, but as these companies start to spin out and start to disrupt industries that are a little bit unique, and maybe they're different than what the California folks see, we will attract a lot of talent here. And I think these companies, as they become venture backed, are certainly going to attract talent here, and these VCs and these entrepreneurs will want to work here, at least is our thesis. And it's what we've been trying to build over years here. But yeah, I think that's on the talent side, on the Midwest side, my 2 cents.
And Milton, I assume that you would say, hey, the infrastructure's been here for a long time. Come on down.
Yeah, no, that's true. I mean, I'm thinking about how the companies, when they come out of these tech transfer labs and, they get that initial investment to commercialize. I mean, there is a support of network here from the very beginning, from concept to commercialization, and it's all over the state. It's not unique to one particular region. I think the problem we have in Florida is that it's still very fragmented. So the folks in Miami don't know what the folks in Jacksonville are doing or what the Tampa folks are doing, but everybody knows each other. And so eventually you get together. So we have an organization in the state that I've been involved in for many years. That's an advocacy group called the Florida Venture Forum. And it's a statewide organization. What they do is they basically promote venture capital, and they help introduce the venture funds to the companies. And they allow these companies through different events that they will host around the state to present and to get to meet these venture capitalists. And a lot of companies like Chewy and Citrix, they come out of Florida and they become successful. And a lot of folks don't realize that these companies are from the state. And so we could use more angels in the state. The angel market is still very fragmented, although we have a lot of wealthy people. You would think they'd organize a little better, but that if there's any particular need, I think that's an area that needs to be filled.
All right. Hey, I want to tell my audience, we're going to try and leave a little time for questions and answers. So think about that. Put your thinking caps on and get ready. I have a few more questions before we get there, though. And one of them for Grady and Bill was, how do you stay connected, like with your colleagues? Do you have other local VCs that you connect with? Do you keep in touch with colleagues on the coast? Do you join the NVCA and be part of that? How do you stay connected so that you don't feel kind of isolated where you are?
Yeah, for myself, we are a member of the NVCA, so we're plugged in there. They're actually, we collaborate with them, and actually had a feature story on one of our companies here called Script Drop in the NVCA highlight a few months ago. We also have some venture partners from the West Coast as well. So part of this is bridging that knowledge gap. There's a fellow, Mike Hughes, was a senior vice president worldwide sales at Barracuda, which was a cybersecurity company. He's now a CRO at ChargePoint electric vehicle area. He's been a venture advisor. He serves as advisor for one of our cybersecurity companies, Aware. And he's on the board of another one of our cybersecurities, Data Anchor, and then provides kind of generalized sales advice for some of our other SaaS and cyber and data science companies in terms of like building out the sales force, sales force compensation structure, those sorts of things. So we've been able to tie, to proactively from day one bridge that gap. That's something I didn't want to cut off, to be, on the, continue to be on the edge of innovation. I maintain my network. Obviously, this past year, I haven't been able to get out there quite as much, but did get out there a couple of times. But whether it's the JP Morgan MedTech conference, RSA cybersecurity conference, but also, for example, I've been seed investors. There's a company called Mojo Vision, Drew Perkins. Keep in touch with him and others out there. So it's been, you have to be proactive about that because you want to kind of keep that bridge of knowledge open, but also we do have some venture advisors, venture partners from the West Coast, and because there are a lot of people that have left, the Midwest and are out there. For example, Mike went to Miami of Ohio as an undergrad and Michigan as a grad, but he's been his life out in California since then. Still has an interest here, so we try and look at those that maybe aren't ready to boomerang back, we call it, but are ready to kind of help and advise. And he has a son going to Michigan and a daughter going to Miami, so kind of gets back here, and that's been a very thing we kind of set out to do up front, and it's been very helpful. So you had to be proactive about it, so it just didn't kind of fizzle over time, because that's the big danger, right? You don't kind of keep plugged in there and you say, oh, this looks like a great idea, and then whoops, I visited California, there's 15 competitors already. You kind of be on the on top of things, and obviously partners too. Last thing I'll say is that we've been able to attract a number of partners that's been surprising. You take Aware, one of our companies in cybersecurity, they're partners with Microsoft, Facebook for Workplace, Slack / Salesforce. I mean, Sanofi led a Series B at one of our med companies. Genentech's been a partner. Even some of the data science companies, Snowflake, Databricks, stuff like that. So that we were very proactive too in building partnerships with our companies, plugging into internationally recognized, and nationally and internationally recognized partners. That's been very important, because at the end of the day, if our companies don't hire like, oh wow, we land nationwide in KeyBank and Procter & Gamble's customers, that's great, but we want them to be nationally, internationally competitive and be able to, win a cybersecurity deal at JP Morgan or Bank of America Lynch or what have you. And so it's been a mindset of ours to really view ourselves and our companies globally. And that took Sterling Ultracold, right? They provide the cold chain for the Pfizer and Moderna vaccines, and now are providing the research cold chain for the Genentechs and Amgens and those. So
yeah. You might want to talk about that a little bit more. I'm not sure everyone understands exactly what you mean by the cold chain. But
the vaccines have to be stored at -20 to -80 and degrees Celsius. So we can provide that storage in multiple. So if you look at UPS, they have these huge kind of storage farms, so to speak, in the Netherlands and Louisville. We provide that cold chain for the COVID vaccine, and then at the local CVS or Walgreens, you have under the counter kind of cold chain, for storage at -20 to -80 degrees C. And then we have some large deals in, for example, in Africa, where we have basically the equivalent of Yeti cooler, which is like 20 pounds. And so you can literally carry vaccines at -20 and 80 degrees C into villages for vaccination, in those villages. And now we're going -150 C, which is what you need for cell and gene therapy and those type of applications. But that's all. The manufacturing plant for all that is in Athens, Ohio, which is one of the poorest counties, in the countries, and then we have some executives here in Columbus as well. But yeah, and so to imagine that, the COVID vaccine was being distributed, via a company in Ohio is kind of exciting to kind of.
That's a great story and a great success for Sterling Ultra Cold, that's for sure. Grady, how do you stay connected?
So everything Bill said, multiply that, because all we do is talk to funds all day. So we have the luxury of speaking with venture capital funds anytime that we want. And so if you don't have your finger on the pulse of the market, exactly how Bill speaks, then you're not really doing it right. Or it's very hard to kind of understand where the venture capital funds are going to land or what they're investing in. And so for us, our pipeline's very large. We know all of our funds very well and intimately at this point because we plan to invest in them, and understanding what they're looking at, where the market is, we get a lot of insight. So just like, again, 2 minutes from Bill, you can hear a lot about certain things and imagine what an hour can kind of look like. And so again, luxury for us is we sit at the fund of funds level, we're investing into venture funds, but we need to understand the startup market and how it applies to what our strategy here is in the Midwest. But we do that with funds all over the world, right? I mean, to assess how Africa is doing, we know very little about it. Bill knows more. We're going to go to Bill and ask him about those things. And other funds in our network cover these topics. And so understanding where these startups are, what the competition is, because again, we get bombarded because every startup thinks we're a startup investor. Because again, you list anything on LinkedIn, you're going to have a startup reach out to you. But if they do come to us, we'll have funds that we can introduce them to, and I'll send them to Bill and Milton. But for them, it is very interesting on a startup side to say, okay, well, you guys have all of these funds. I'm in this cool space when it comes to a virtual platform, and it's like, great, there's 2,000 of those right now. So I can introduce you to firms that'll talk through the competition. But again, having a network, and I mean, honestly, 4 days a week, I'm talking with 4 different funds all the time. And so just to continuously build out the pipeline, educate ourselves on what's out in the market, because this industry does change quickly despite returns taking forever. But it does happen very quickly. And if you don't, again, have your finger on the market, you're going to be left behind, or you're going to be investing in things that won't produce the returns that you're underwriting for, or it won't shape your ecosystem the way that you want it to. So I think we have a unique advantage being here in the Midwest or these peripheral markets where we can leverage knowledge and insights and like these applied learnings from everywhere else that's already done this. And I can speak with people like Milton and Bill and say, okay, what are you guys looking at? What do you see in your ecosystems? And try to either apply that to Wisconsin, or at least know that my other funds in the pipeline are correct or incorrect based on what else is in the market. So we stay informed strictly. I mean, keeping our network up to date is important. Producing thought leadership pieces for corporations to read here in our state is important. And then just really being that concierge connector to these groups to bundle it all together. As Milton was saying, it's like we have all of these separate pockets and things working. Let's get them all together so this think tank, if you will, is educated. Yeah.
Alrighty, Milton, you had mentioned earlier an organization, I didn't catch it, that you belong to, or that a lot of people belong to there. Is there anything else? Is there any formal networking going on amongst the
I mean, so it's called the Florida Venture Forum. It's a statewide organization. I think it's been around for 25 years. Its membership is the who's of all the venture funds, growth funds, the new companies and more developed later stage companies, everyone in the state, but it's not exclusive to just folks. We have funds from Atlanta, New York, Dallas, LA, Silicon Valley, and Boston, and they are basically the main organization in the state, which you want to be on that membership, because that's, when they host events, that's where everybody gets together, and they shift the venue every year. They have a major conference in January, late January, and everyone comes down. Now, since COVID, we ended up having the event virtually. Not as good, obviously everyone still had an opportunity to connect, and there were breakout rooms and all that good stuff. But the in-person events are always better. You know, there's dinners and opportunities to connect, and it's usually like a 3-day event. So you have golf and you have all these opportunities to really get to bond with each other. So we're optimistic that coming next year we'll be doing one in person. But it's an organization that provides education. It provides an opportunity for these companies to present themselves to investors, and for investors like Bill and Grady to to get to know the other colleagues that are joining the events. But it's an organization that also advocates at the state government level if things need to be changed. So we're very active in promoting venture capital in the state.
Very good. Well, thank you all. We're very close to the top of the hour. Christina, have we got any questions? I'm through with mine. No questions? Alrighty, well then I think we'll just end a minute or two early. Thank you all for participating. Milton, Chris, Bill, Grady, we appreciate all your insights and thank you very much. It was very interesting. Have a good day.
Thank you.
Thank you.
Bye everyone.
Yeah.
I see it.
It's an honor.